Dick, wondering, first of all, your thoughts on potential Fed action, 50 to 75 points perhaps in March. Is that warranted? Is that healthy?
Well, I don't think monetary policy solves the problems that exist today, but psychologically it is very important. And I think the Fed will reduce interest rates for sure by 25 and possibly by 50. I don't think they will go to 75 until we see how things go over the next month or two. But psychologically, it's important, and they will move.
We're just talking with Ron Temple from Lazard, who was saying that he sees this really aggressive drop that we've seen over the past few days as more of a sobering up than a panic. Do you agree?
Yes, I felt the market was too high. I've been on this show the past few months and since late last year. And I personally sold a lot, and now I'm actually buying. I think it's sobering up, but there are some really good opportunities. There's many stocks, really good stocks, that were actually in bear territory last week. And also at these low prices, the yields on some of these stocks are great. I mean, last week you had Chevron at 6%, British Petroleum at 8%. Those stocks were down 35%. And cash is also obviously worthless at the moment in terms of returns. And bonds, I wouldn't touch a bond at this level. So these are really good returns, and you get paid to wait to see what happens. So I think there are a lot of investment opportunities for stocks that have been hammered even more than the overall market.
Why wouldn't you touch a bond at this level, Dick, just because of price?
Yeah, I mean, I think if we get this solved, and I think we'll eventually get this solved, there's no question that bond prices will go up. Go down, and you're going to be a loser when that happens. And so there's just for a 1% yield, why would you take the risk that you're going to lose, your principal by 30 or 40%?
Right. The popular theory today is that we'll get some kind of coordinated action. These headlines crossing right now that G7 FinMins plan a call tomorrow to weigh the response. Central bankers from the G7 will join that call about the virus. Dow's up almost 600 points. Can we put two and two together?
Well, I think fiscal actions will actually help the economy, and I think that is more important in terms of actual impact on the economy than monetary. Monetary policy is, again, important psychologically, but the world's economy is not suffering because interest rates are too high, and getting them a little bit lower isn't going to help. But psychologically it's important, but fiscal policies can be very helpful, and I think governments are going to do that as well. Even just the fiscal policy of what you need to control this epidemic is billions of dollars that are needed.
I want to mention the major indices, Dow, S&P, NASDAQ, all up more than 2%. Dow leading the three, up 2.25%. When you talk about buying stocks now, you had held off, even been selling when the market was higher. What's your filter, especially considering that we're heading into the uncertainty of an election season?
Well, there is uncertainty, and so I am buying stocks with high dividends, with that good yield, so that even if they decline in price, they will eventually come back, and in the meantime, you can earn 4 or 5%. And even higher on the stocks that I am buying. And so that's better than zero in cash. All right. Eventually, they will be higher, even if they go lower.